Welcome back to the show. You're watching Empathy is Money. I'm your host, Namdi. And in this episode, we're going to look at the headlines. We're going to look at the current prices. This is a channel where you show up to learn. And you're going to learn about Web3, metaverse, crypto, tech, healthcare, whatever is trending, we're going to bring it to you. All right, let's dive right in. All right, we're going to start by quickly, I like to look at the top 10 assets trading at the moment. We're starting out the day with Bitcoin down at 8.4% at $23,500. That's down from its peak at 24,500. Ethereum is at $1,800, down 8.8%. Binance Coin is at 310, down 8.0%. XRP is down 10% at 37 cents. Cardano is at 51 cents, down 13%. Solana, $40, down 10%. And wrapping up the top 10 list, Dogecoin, 7 cents, down 14.3%. If you've been paying attention to the headlines, you know Dogecoin and SHIB saw a 20%, above 20% rise within the week. Specifically SHIB. SHIB is been making some significant upgrades to their network, and they've also been putting out a lot of some new software tools to get more people into their network. And it does not surprise me that the price action saw a significant increase. Let's see what's trending in the headlines. What is in the headlines today? FTX CEO SBF Sam Bankman-Fried. He's focusing on derivatives today. He's paying attention to derivatives. Solana Move to Earn app. STEPN launches NFT collab with Atletico de Madrid. SBI Holdings to cut Bitcoin mining operations in Russia. Crypto lender Hodnot announces police inquiry. They cut staff by 80%. Over $540 million liquidated as Bitcoin and Ethereum plummet. Gnosis safe to airdrop 50 million Ethereum tokens to wallets. And that's really interesting to me. So especially the STEPN app, which debuted earlier this year, and I got really excited about it, given that I'm really into outdoor activities, especially taking hikes. And it, I found the app to be a bit complex. It felt like there was just so many layers to it. You spent more than you actually got back while using the app, and I didn't appreciate it for that. But usually, the first versions of these software solutions are not exciting to use or have some kinks that need to be ironed out. And STEPN was no different from it. The business model was you purchase these uh, virtual sneakers that allow you to um, run or walk. And as you use it, as you exercise, you get paid in the native token, which you can then exchange for a USDT or dollars or whatever currency, fiat currency. So you can play to earn when you engage with this particular software. But it seems like STEPN's new partnership with the La Liga soccer club Atletico de Madrid is going to bring over 1,000 exclusive NFT soccer boots to the Move to Earn app. So they're making a significant move, not only to bring in the soccer community into their network, they're also bringing more value to people who already use STEPN or already engaging with the app. I think it's a bullish move. I think it's gonna. I am still not convinced. I'm gonna wait on the sidelines to watch how far this goes. The the article that I'm reading here basically says that since Steppen's release at the beginning of the year, Steppen has encouraged crypto fans and non-crypto natives to lace up their running shoes and hit the asphalt to earn um, green Satoshi tokens, GST, which is their native tokens. If you've never tried it, it's worth checking out and see if it works for you. It didn't work for me, but you can look it up and do your own research. Um, I like this news. Moving right along, I'm interested in reading anything about Sam Bankman-Fried. If you don't know him, he's the brain behind FTX, which is probably one of the major. I think Coinbase is right up there, and FTX is second runner up in terms of crypto exchanges within the United States. Obviously, Binance is globally at the top. Uh, let's see here. Okay, so it says FTX CEO believes that bringing crypto derivatives to US traders is the single biggest ask of our customers as long as he can remember. This is treacherous waters, obviously, because the SEC and the Feds, they're they're very hawkish over derivatives, and they're very careful about, you know, people who are allowed to trade certain derivatives. You have to be an accredited investor, meaning you have to be making over $250,000 annualized. But I believe that if you can gamble in a casino down the street, you should be allowed to make your own financial decisions. Now, I also understand the need to protect consumers against grifters and scam artists, but we're all grown men and women, and I believe that you should be allowed to make your own financial choices. Well, Sagenback-Fried, being a smart investor and also one of a really smart guy in general, is trying to bring crypto into the space and trying to decentralize them, bring more access to your average investors. He has spent hundreds of millions of dollars bailing out struggling crypto lenders, one of which was Voyager and Robinhood. Uh, Voyager filed bankruptcy, but Sam Bankman-Fried, he's rolling in cash and he's ready to spend. He's been also going to Capitol Hill, to DC, to lobby politicians to create bills that favor the crypto industry. So, in his words, he says he continues to think that one of the most important things that he has been able to accomplish is it remain, that it was, and he thinks it's a super high upside. Is It's one of the single thing that he's paying most attention, and he thinks that it's incredibly important for the future of the entire ecosystem that we can bring the same level of liquidity and market access to the United States that people have had internationally. Uh, a derivative is a contractual agreement to buy or sell an asset based on future prices, while the SEC continues to wrestle with which crypto assets qualify as securities. The CFTC has allowed several companies, mostly crypto natives and traditional finance, to offer crypto derivatives to traders. So he's paying very close attention to it, and I follow the money. If he thinks this is the demand is significant, especially in the DeFi space, if you're paying attention to what's going on in that area, um, DeFi has remained strong within this bear market. We've seen more liquidity pour into um, exchanges like Uniswap or the YDX or even Aave, MakerDAO. These platforms allow they're not managed by any centralized party. They're all completely algorithmic smart contracts that deploy based on already programmed instructions. So I personally use platforms like Aave or MakerDAO or Uniswap to trade crypto, and I try to avoid centralized exchanges because of the core principle of Bitcoin and crypto. It's about empowering the user, allowing us to make independent, non-censorable decisions with our finances. And DeFi gives us that power. Now, in recent news, we're starting to hear a lot of stringent regulations come out of DC, one of which was the recent clampdown on Tornado Cash. Tornado Cash is a mixer that uh, allows users to what you basically scramble their address, and it's a privacy move where you can't trace where the transaction came originated from, because when they place their address in there, it mixes it up with other addresses, so you lose track. Now they don't like it. This body called OFAC. Here, I'm gonna look it up real quick. I'm gonna give you the full meaning of it. It's an agency, one of the government agencies. They came down on it. It's the Office of Foreign Assets Control, and they don't like assets like this. They don't. I'm sorry. They don't like softwares like this that allow people or give people the ability to circumvent regulations, or actually provide privacy. In my opinion, the key offer or for a software as a service like Tornado Cash is that it offers privacy, and which is something that's desperately needed in the financial industry. But recently, OFAC, or the feds arrested the developer, and it's not the feds. This guy is the developer of Tornado Cash is located in the Netherlands. He was recently arrested, and why they haven't been quite very transparent on his charges. It seems like they just basically reached to and made up a reason to arrest the developer of this platform, which they banned. I find a significant problem with that because this developer created open source software. Now, what people use that open source software to do, he has no control over. And I actually think that that's a significant infringement on freedom of speech, because open source code is speech. It's computer language. And when that's infringed upon, that's against our constitutional rights. Now, that's limited within these United States, but the arrest of a developer of an open source code sets precedence to what could happen to developers of Ethereum, for instance. Vitalik is under scrutiny here, and plenty other um, centralized exchanges that allow for people to use some of these softwares can be influenced by regulators. So it calls for a significant, for a rally for these people to come together and figure and be smart about it. Now, I don't think that this is a call to be rebels or cowboys or figure out how to circumvent authority. It calls for the tech to become smarter, for these developers to make it impossible for um, grifters or scammers to to scam people of money or try to avoid the law or break the law. It just asks for the platforms to become better. I'm all for that. There was a lot of conversation chatter on Twitter, on crypto Twitter, and someone posed a question to Brian Armstrong, who is the CEO of Coinbase. It's a publicly traded company, one of the largest exchanges, crypto exchanges in the country. And he asked him, if you had the decision, if you had a choice to, if regulators asked you to stop Ethereum staking or derivative or staking offering on the platform, what would you do? And he said he would not compromise the integrity of the network, which I thought was a smart answer. What he would do is would just divest from the offering. That product offering will no longer exist on the Coinbase platform, which is a neutral place to be. It allows the user the autonomy to go ahead and look for alternative solutions, which there are, because yeah, you don't have to necessarily conduct staking on the Coinbase platform. What you can do is you can still stake on the decentralized platforms like Uniswap or other platforms that offer staking but are decentralized. So I think that it's a safe answer, but it's still a call to action. And I'm looking forward to these guys spending some more time, uh, whether it's pooling money to elect favorable politicians to DC. Because let's not make any mistake, policy follows money. So if these guys want favorable policy coming out of DC, they've got to start spending the money to get the right people elected. There's a lot of money floating around in this space, and I think it can be done. Um, and the urgency is there. Moving right along. Let's see what else we've got here. So coming right along on that, right after that. And just to give you guys a heads up, Ethereum Merge is to launch in probably 4 weeks or so, September 15th. We're expecting that it's a bullish trend. It's bullish news basically. Ethereum is going to switch from a proof of stake to a proof of work mechanism. From a proof of work to a proof of stake mechanism. What that means is that you don't need to buy uh, miners or computers that actually run all day to run the Ethereum blockchain all day to create more Ethereum tokens. New Ethereum tokens will be minted by users staking 32 tokens on the new Ethereum upgraded network, and that process is less, it's more energy efficient. It's cost effective. It allows for more people to get involved, and it also it allows for scalability and reduces congestion. It basically makes the network more secure. We're expecting that to happen, and Ethereum currently at price $1,697. I think uh that the price bakes that news in. That news is basically baked in. And if this would be a good opportunity to get in, if it's not financial advice, I see Ethereum uh, showing significant bullish trends here. Tether reveals 58% decrease in commercial paper holdings in latest attestation. There's been a lot of negative news surrounding the people behind Tether, and a lot of that has been because of suspicion that they don't have enough liquidity to back uh, their claims of Tether. All right, so the way Tether works, it pegs the US dollar 1 to 1. And so for every Tether that's out there in exchanges, there should be a US dollar, an equivalent US dollar in reserves. People behind this project claim that they have that, and they've been audited in the past and they've been able to prove that. But there's still a lot of speculation that there's nefarious activity going on. And this headline does not surprise me. Um, let's see. Tether has just released its latest attestation report breaking down the reserves backing the USDT stablecoin. With the market cap of 67.5 billion, USDT is also the third largest crypto behind Bitcoin and Ethereum. And with so much at stake, it's little wonder Tether's reserves have been under constant scrutiny. Yes, this needs to be under constant scrutiny because it guarantees the stability of the entire crypto space. A lot of users use Tether as an on-ramp and an off-ramp into multiple cryptocurrencies. And if you believe in the in the use of this of crypto, that's the purpose that it serves, you find yourself having to exchange fiat currency into Tether and then into whatever preferred crypto that you are looking to engage with, and back out of that. So it's important that that the guys behind Tether, that this is it's audited, it's regulated, and preferably there's some type of insurance back in this.